Hello, and welcome to ICA in Conversation that focuses on current issues and challenges in the context of compliance and counter-financial crime. I'm Tim Tyler, and coming up, we're going to consider the relationship between the MLRO and the board, why it matters, and how we can ensure it is effective. This is the second in four consecutive In Conversation podcasts on the theme of board engagement, taking place at the same time on each Wednesday of February. So, a reminder, last week I talked to David Jackman, a board chairman himself, setting the scene, and I hope understanding better the basics of a good relationship between business and the board. Next week, I talked to Suzanne Alfs about the particular issue of board engagement on cybersecurity. And on the 25th of February, I'll discuss the psychology of governance and, in particular, how good boards can make poor decisions with Paul Eccleston. But today we consider that unique relationship between board and the money laundering reporting officer, the MLRO. And to do this, I'm delighted to be joined by Jason Holt, a vastly experienced MLRO and global head of financial crime. Jason, welcome, and thank you so much for joining me for this conversation.
Hi, Tim. It's a great pleasure. Sound like I'm in esteemed company, so hopefully we can have a great conversation today.
I hope so. Thank you. So, as ever, we'd love to hear from you wherever you're joining us in the world. You can contribute by using the comments section on the LinkedIn event. And it's very often great to hear where you're joining us from. But in particular, we'd love to hear your thoughts and any questions, and I'll try and bring those into the discussion. Before we begin, a very quick reminder of last week's headlines, that conversation with David Jackman. A few things that came from it. Firstly, be interesting in our engagement with the board. Secondly, value the non-executives. Third, build trust and confidence over time and look to engage on the bigger issues. And we talked, for instance, about ESG. We considered the risk appetite as a challenge for boards to understand, and in this context, the way in which we interpret risk. We recognize good practice in answering questions at the time they're asked, rather than saying, we'll come back to you, although, of course, on occasions that may still be necessary. And finally, and slightly worryingly, David highlighted that our first engagement with the board may look and feel like an interview, and that's part because it possibly is, and the board will talk about you after you leave the room. That's a reminder on last week. And I don't know how much of that you would agree with, Jason, but we're going to, I hope, build on those foundations. And I'd like to start by asking you about how you would characterize the relationship between the MLRO and the board.
Well, I guess simplistically, and in one word, critical. I think it's very hard to be a successful MLRO without a good relationship with the board. Remembering what their, in particular, the non-exec directors' responsibilities are. One of which is to provide advice and guidance to the executive members of the board and the firm. They can't do that unless you can communicate effectively to them what the issues are that they might be providing advice on. So communication component of that is critical. You did mention David's comment about trust, and that's something I drill into my teams really. And there's something called a trust equation that some of your listeners might be familiar with, but it sets out how you build trust, and it's often used by consulting firms. So basically, it's your credibility. In other words, can you answer questions effectively and accurately? Your reliability, in other words, and I think David mentioned this as well. How quickly can you respond? Can you respond on the spot to a question? Do you know the information that drives that confidence and trust? And lastly, intimacy. So have you built a relationship, a rapport with those members of the board that allows them to feel engaged with you? And all of that is divided by what's called self-interest or orientation. So to what extent do the board think that you are saying what you're saying, perhaps because you have a very conservative risk appetite, or you would say that, wouldn't you? You're the MLRO, or that you're not thinking about the firm at large and its objectives. So trying to make those relevant in those conversations and demonstrate that you have that, I think is important. That self-orientation piece in particular, I think can come across very negatively sometimes, a bit motivated by for example, if you use negative motivations to a board, say, if we don't do this, someone's going to go to prison, or those types of things, use the stick component, I think that can play out quite badly. So critical is the short answer to your question, Tim, for all of those reasons.
So um, I'd like to drill down into this trust equation, and I'm
Yeah.
sure that many around the world will be thinking, "Wow, that could be really useful." I don't imagine that you're looking to put numbers on this, but recognize these different qualities in your engagement: credibility, reliability, and intimacy. Um, any thoughts about what does that actually mean in practice?
Yeah. So for me, what it means is that you have to think about how you demonstrate and evidence those positive characteristics on an ongoing basis with the board. Um, Key for me, to build that is the intimacy piece. So I think often, and it can depend on a number of factors. Building a relationship with the chair of the board, if you get the board that you're dealing with, if it's at a PLC level, then obviously it's a bit more difficult to do that. Often they're not always readily available, but if you can build that relationship outside of the board meeting by having pre-meets, obviously arrange that through the appropriate channels, whatever they might be at your firm. So usually it's corporate secretariat. And don't do that in a manner that just becomes a routine meeting such that you don't really have much to talk about. It has to be, driven by something you think is important to brief them on. The reliability piece is often about being proactive. So not leaving it to the last minute to talk about changes in regulation or problems, but giving them a runway up to that. And I think that sits outside of the NEDs as well. So from an executive management perspective, not bringing surprises to the board. You may have frustrations, perhaps about things that are not working so well. One example might be, the business haven't responded to your enterprise-wide risk assessment questions yet. If that's really critical and you need to bring that to the board to get their support to make that happen, then never do that without speaking first to the executive management that also sat on the board, and explaining, why that's necessary. And of course, the question will be, what have you done about it so far? So make sure that you've taken all the appropriate actions to that point and be clear about what you're asking for. And then the credibility piece, I think, takes a bit of time to build up. And often people, I've worked with some boards where they have preconceptions about how things should be done based on the other boards that they sit on. And they may not always be aligned to perhaps how that might work best at the firm that you're at that point. And trying to flag that in a manner that's seen as constructive can be quite challenging sometimes, because you might have very different views. But using your communication skills to do that in a manner that doesn't set you on a collision course, I think, can be helpful. It might be unavoidable, but that doesn't tend to build trust if you end up in that situation. So those would be my kind of quick prompts for people in terms of trying to build that. And then you see it come out through the relationship that you have and the way in which you interact with the relevant boards. And if that's not improving over time, you might just want to go back and think about each of those factors and how you're going to employ them to build that relationship.
So it strikes me that there's a parallel between what you're describing now, relationship in this instance between the MLRO and the board, and the relationship between the MLRO and the regulator.
Yeah.
Some of the same principles will apply about building credibility and trust, being proactive, being able to answer questions and not continually, well, I'll come back to you. Is that fair? Is that?
Yeah, certainly. So, preparation is key, isn't it? With any dialogue with a regulator or a senior group of board members, and thinking carefully, if you were sat in their shoes, what would you ask? Is an exercise that I often sit down with my team and say, okay, here's our report. Let's think about, what questions you might reasonably ask based on what we're sharing. For example, what have you done already to try and resolve this? I think that's important, and this is the difficult one, and I think this is where often people struggle, in particular with well, both with regulators and boards, which is we have an obligation to be transparent with our regulator as we do with our boards, but often or sometimes that means delivering bad news,
Yes.
and that can be quite difficult. And I think where I've seen firms and MLROs find themselves in really sticky situations is where they haven't been able to pluck up the courage to have those difficult conversations. And candidly, from my experience, having them sooner rather than later is always better. And obviously, certainly the UK regulator and most others around the world would expect that you were, transparent early on. And if there are clarifications, you would provide those. I think you have to balance that carefully.
Sure.
But I definitely think that there's a parallel. But they can't help you unless you're upfront about what the real challenges are. But make sure you do that in a manner that is collegiate in terms of with the executive management, if you can. If you can't, then I think probably you need to think about your own career and whether or not that's you're in the right place, candidly, which sounds harsh. And I think you want to wait a while before you get into any rash decisions. But certainly that's something that people need to think about as well. Are you aligned?
No, and I agree. I mean, we've both been involved supporting Ariane in developing the MLRO course, and one of the things that emphasizes is that the MLRO does need to think about their own position, their own interest, not
Yeah,
as a constant, but as a balance, as you say, because there is an element of risk in the role, contained within the role. And I guess that's part of the challenge. You've described the trust equation as being sort of inversely proportionate to well, the self-interest orientation. That's the thing that undermines it.
yeah.
That's where this needs to be, where there needs to be an element of self-interest that isn't documenting everything, and you need to, in protecting yourself and bringing that mindset, but it is streetwise and savvy and recognizes the risks that this entails.
Yeah, and also I think it's quite easy to think of it in it being ruthlessly transparent about particular issues that merit board's attention. Um, and that can become a scary thing. But I think you have to remember that that's what they need to do their job. And
Yes.
I think there's been a lot of criticism, possibly fairly, on MLROs and other risk functions historically for just not going and having a difficult conversation. My experience is, there's the esteemed people that sit on the boards that I've been lucky enough to work with sometimes might react a little bit, and you feel like, hang on a minute, you're shooting the messenger here.
Yeah.
That can be a bit tough, but for the most part, that's not aimed at you. That's a frustration about the circumstances, and very quickly, if that even arises, you get to a position where you're being provided with the right level of support and input. Um, but you
Yeah.
just need to make sure you characterize it in the right way from their perspective. You're seeking to protect and help the firm, not yourself.
So part of that challenge is to help members, non-executives, the chairman, the board, to understand key issues. And some of the issues that MLROs are grappling with can be quite complex, quite
Mm.
nuanced and subtle. Are there any particular that stand out that present difficulties and challenges in this space? And how are you addressing that?
Yeah, so look, every new thing is challenging. So, whether you're talking about ECTA and the failure to prevent fraud, it has a nexus with a whole range of other controls that probably don't sit on your remit, under your remit as an MLRO, for example, ESG, are you greenwashing as a firm? That can be quite complicated. For me, also, when you're conveying, so for example, you mentioned it earlier, so the enterprise-wide risk assessment, you've got to be respectful of the amount of time, reading time that the boards have to go through. So I found ways of presenting complex information in a manner that is sufficiently succinct to allow them to focus on the key issues. And in my MLRO reports, for example, I use a spider graph, which sets out key controls with a rating or maturity rating. And that allows them instantly to look at the spider graph and say, okay, Jason, you've got, for example, an issue here with record keeping. You're saying it's not fully mature. What are the issues? But perhaps all of the other points on the spider graph are looking positive. So it allows you quickly, and also, frankly, from a board director's perspective, they'll spend more time then looking at that section of your report so they can dive into it in more detail. Another way that's been quite useful to explain complex challenges, and this actually helps diffuse the self-orientation point of the trust equation we were talking about earlier, is to not be afraid of leveraging third parties to come and join or provide an overview of a particular topic. Generally speaking, their level of self-orientation in those conversations is going to be viewed as lower. They haven't really got an axe to grind. They're not inside the walls. So whether you use that subsequently where you found yourself, having a challenge, building the trust of the board, bringing in respected third parties to speak on the topic can be, I think, very useful and can diffuse some of those challenging situations. And also, complex issues, especially if they're founded in a legal analysis, bring the right people in to talk about the right things at the right time. That's important too.
So what you've just described there, I recognise there have been occasions when I've been asked to speak to boards about a particular series of changes that are being embraced, conflict resolution or a conflict of interest and culture. And what I found work quite well is where I speak to the generic issues and I sit alongside the MLRO or an equivalent who speaks to, well, taking that, this is what we are doing within the business. And as you say, it builds confidence and trust that there is a transparency here.
Yeah, and you can leverage, industry findings, regulatory fines, and those types of things to underpin, the message you're trying to deliver. I think there are ways of doing that which are more positive than other ways, but focusing on the succinctly, because boards don't have a lot of time to listen to it, but on the positive things you may have done towards achieving a particular compliance, helps, and then you dive into the pieces where perhaps you're finding it more challenging. It certainly helps.
That's helpful. Can I ask, what are you looking for in that engage? What are the positive signs that the board is engaged, it understands the issues, and your message is landing?
So if you can, for me, a good barometer of that is if you can anticipate the questions that your report or presentation is going to elicit, that to me would indicate that you're providing the right level of communication, and that the questions that are asked, you're obviously prepared and ready to speak to. And that would be true of a regulator as well. I think oftentimes people, either racing to get a paper in or, under other pressures, we're busy. It's actually quite easy, might sound ridiculous, but to, put a paper in quickly, then the board meeting comes up, you've come for another meeting 10 minutes before, and you haven't had the time, in your headspace to think about it. But that would be a bad scenario. So making the time beforehand definitely helps. But yeah, for me, if the board are asking the questions you would expect, then you've probably communicated what you wanted to effectively.
And if I may, can we just step back a little to consider the tone and the content of messaging? So I'm thinking in particular of this badge that people would often wear, either physically or metaphorically in their engagement. If you think compliance is expensive, you should try the cost of non-compliance. And maybe that was useful for a while, maybe, but I think you've highlighted that we're moving beyond that kind of thinking into more of a mature relationship where there's a sort of mutual understanding and awareness. And one of the things I asked David last week was, to be effective in terms of engaging with the board, there's a need to not only understand the compliance, the MLRO issues, but to really understand the business, the supply chain, the strategic risks and the strategic direction. So that's a roundabout way of saying, how would you characterize that? And are you seeing that changing over time?
Yes, for the better. I think people would, my team would be roaring laughing if I said, "Oh, we shouldn't use that phrase," because I think I actually recounted it yesterday to one of
Oh,
my colleagues.
okay.
But it is one of those trite and unhelpful diatribes. I think nowadays I agree with that. But for me, the critical component of what gets you into that place is you've probably failed in your communication
Yeah,
already,
yeah,
and you've shown a lack of alignment in terms of thinking about the other parameters. So you can say, for example, rather than say, if we don't do this, we're going to get a fine, you can say, if we don't do this, I'll not be able in future to provide an assurance letter or a positive response for an RFP or sign off on a particular deal because the other party will be asking for levels of assurance about our own compliance, and we won't be able to meet that. And that will have a commercial impact that might be more substantial than the potential cost of fixing it. So I think that you can
yeah,
almost turn the kind of negative on its head to say, look, what we're trying to do here is support the firm's ability to do business. And here would be the commercial downsides outside of fines and enforcement, because I suspect most people don't think that's likely to happen, but they do understand that the commercial ramifications for not doing it might be imminent for many firms. So
yeah.
I think that helps. And it also demonstrates you understand what the business is doing, what its primary purpose is. It's not compliance, it's to be successful for its shareholders largely.
So I mean, it's a framing question then.
Yeah.
And that I think applies to almost any engagement, whether it's from the MLRO or compliance or any part of the business. You offer up options without becoming hysterical around, this is going to be the end of the firm if we don't do this. Coolly, objectively, and candidly, there is always an option. There's always, we won't do this, we won't invest. And that's a rational decision, and boards will want to think about, well, what will be the implications if we don't do
Yeah.
this?
I think that the pre question to that. So often it's how do we do this particular thing? Or I used to hear that a lot, less so these days. The first question in my mind is should we do this? Through the lenses of all the different risk factors that might be at play. Financial crime is only one. And then if you could get through that, then the how becomes a conversation that you can have, standing shoulder to shoulder, which is a better conversation to have because you've all agreed. And if you haven't, then you need to thrash out how significant that blocker is. Is it, if we do this, we're going to break the law? Well, you can't do that, right? And is it black and white? Yes. Well, that should be a red line for anyone working in a second line function, in my opinion. Um, Not yet come across that, candidly, pleased to say, but certainly, in early conversations that can happen, and you might reject doing certain things for that reason or in a particular way.
So you mentioned that you've used, I think you used the term spidergram. Is that sort of an infographic? Or
Yeah, so it's available in Microsoft as one of the chart options. I think they call it a spider chart in that environment. So you attribute scores. Uh, Actually, recently used leveraged AI to take, for example, all of the answers to all of the questions in an EWRA, which was thousands and thousands of questions and answers aggregated across, and then use those answers to ascribe a score to the particular control that's being rated, and then use that to inform the infographics. So leveraging a bit of technology, especially when you've got large data sets to review, can be very, very helpful.
So, so some of this is visual,
Yeah,
and a lot of your communication is just providing reassurance. This is under control. We don't really need to talk about this, but it offers the opportunity to identify those things that perhaps aren't under control or are presenting a slightly higher level of risk. And of course, it's reasonable to anticipate those sorts of questions that might come from the board. You know, you've identified this particular issue as being amber. Tell us what you're doing. Where is this going? When will it be green again? Or whatever it is, what language you use within the business.
yeah. So obviously there are other ways of conveying that information. You mentioned RAS. It tends to be a bit of a blunt instrument because you've got to have already agreed what the statuses are. Um, Risk appetite is a good example of where you can engage a board in a good conversation. So, I see my role would be to recommend, along with the executive, businesses where risk appetites might sit from a financial crime perspective, but it's also to inform. So I think it's very easy to come out with low or none. Articulating what low for one person might mean something totally different for
Yes, of
another. So
course.
then refining that into, and again, data points, I think is super useful. So having an informed conversation about what your appetite is for how long you take to review sanctions alerts and whether you block at the end of a day or within an hour any potential matches, is well informed by a discussion about recent regulatory fines or actions taken and what timelines those involved. And I think without that context, again, context is everything, it's very difficult for boards to come to, it's more challenging for them to come to conclusions
Yeah.
about what an appropriate threshold or tolerance level might be. But having practical conversations can be very useful.
So you mentioned risk appetite, and it seems to me that that's like is arguably the beating heart of your relationship with the board. That's a sort of foundation document that you build upon, and presumably you will reference on an ongoing basis. This is what we considered when we last touched on refreshed our risk appetite. This is what we've agreed. We're looking now to depart from that, and we need to sign off. Or something else I talked about with David, it might be actually I'm looking at the strategic direction in these sectors. We've agreed a risk appetite that would allow us to go further and deeper, maybe into some more higher risk sectors or higher risk products. So that's the sort of conversation that's going on in this context.
Yeah, and that's particularly important for subsidiary entities in my experience. So often set at the top of the house level, and then everyone takes their apportionment of the risk agreed at the PLC. But you'll have certain entities that want to use a large percentage of that. So how you disaggregate that amongst subsidiary entities is useful, and you're probably going to have quite a different conversation. If you've got an office in South Africa, or actually it's come off the list now, hasn't it? But a country that is on the list of high risk third countries, you're going to be having a different type of risk conversation, and that needs to sit within the umbrella of the PLC. So context and everything, same as the conversation with that board as well. It's going to be different.
Thank you. So we're actually coming up to time in the next few moments. It gives me the opportunity to just ask Jason, is there anything else that you'd like to add? But before I ask you that, I think it's also worth just highlighting some of the things that we've touched upon over the last half an hour. So I think an important part of what we've talked about, you captured within your trust equation. That recognizes credibility, reliability, and intimacy as the positive elements of that equation that is potentially undermined by obvious naked self-interest. But that was a useful conversation, or I'm recognizing, well, as an MLRO, we have to be a little streetwise, and there are elements, there are times when we do need to think about our position and to protect it. But there is a way in which we can do that, which is positive. And we recognize the importance of the way we frame and position the issues, but also the way that we provide a runway to them so that you talked about no surprises in this context. We've thought about the engagement with the board and non-executives, chairman, and the executive. We thought about meeting outside of the formal parameters to build those relationships, the credibility and the reliability. We've also talked about what I would call the hygiene factors. So this is sort of reflecting ongoing dashboard data around the key issues that may not occupy a lot of time, but nonetheless, key individuals are going to want to be reassured that those things are being addressed. We've talked about anticipating questions, but also recognize that there's a sort of parallel with the relationship that you have, particularly as the MLRO, with the regulator. And there are challenges contained within that as well. So, Jason, any final thoughts before we wrap this up?
Thanks, Tim. So the last thing that I always try and consider that I've found quite helpful is who's your audience? Understand who they are, what their background is. My experience has been, and it might not be true every time, but people who come from a strong legal background usually prefer to have written reports that they can read in detail and analyze in a kind of a legalistic fashion. If you have senior people on your boards that come from a trading background, they much prefer an infographic or a graph because that's what they see day to day, and therefore they're more comfortable with it. So think about who your audience is. And then last but not least, in particular as it relates to the executive management, and I don't mean this in a negative way, but understand what their self-orientation and interests are. So your head of finance is going to have a different perspective on things from your head of legal and your CRO. And look to leverage that to be able to talk to how the things that you think are important may be impactful from the area that they're accountable for. And I think that can certainly help with the conversations that you might have and to garner, better support at that board. And perhaps last but not least, boards are your friend, ultimately. You should treat them with respect and some caution, but they are actually there more or less with an alignment to what you're also going to be trying to achieve. So I think if you go in with that view, then you'll get more out of that relationship and build a strong one.
Okay. Well, Jason, thank you. It has been fascinating. And I do appreciate your time. We do appreciate your time. And thank you wherever you're joining us from across the world. Thank you for your time and interest. And for those that will be listening to this or watching this in the future, we hope this has been of value. We don't pretend to have all the answers in the space of just half an hour, but I think it can be useful to highlight some of the key issues and where we can challenge ourselves to be better. So once again, thank you, and do take care wherever you are. Bye-bye.
Thanks, Tim.